Austin Olage from Algo Exchange joins us on the Lex Factor today. Algo Exchange is an algorithmic trading platform for retail traders. I'm Lex, and this is the Lex Factor. Let's meet Austin. We have a little Yellowstone music because I should have been a cowboy. So bear with us here. Wait till you hear it. You might fall in love with it sometime in your life, maybe not. But I am the urban cowboy.
Good stuff, man.
Yeah, man. Austin, nice to meet you. This is our first time meeting each other. We had a little pre-show kind of get together and first met each other, I believe, right?
Yeah.
Where are you from, Austin? First of all, I for some reason when I hear your name, I always want to think Texas, but you know what that is. But
No, Austin in Texas. No, I'm actually down in Naples, Florida.
Perfect. One of my favorite places.
Awesome.
I was just there this year.
Awesome. So, come on back.
Yeah, I absolutely will. Cool. So nice to meet you. We're gonna get right into it. You are the co-founder of Algo Exchange? Founder? Okay, yeah. Perfect. All right, first of all, tell us a little bit about Algo Exchange, because here's what I want to emphasize. In the opening, you made sure I said for the retail investor. So I want you to take us through that part too, because that's important. As everyone knows, I work for Tradier. It's a retail trading brokerage, right, for true retail people. We have just gotten into futures very shortly ago, about 8-ish, 9-ish months. You come at the right time, because we have all these APIs and we love having great platforms connect to us. You are one of those, and we love having you in the whole B2B sphere. So tell us a little bit about Algo Exchange and how you got there.
Yeah, so Algo Exchange basically allows retail traders to access automated trading systems directly to their own self-directed brokerage accounts. So what that means is we have a menu of systems, and any retail trader can basically click those systems and say, I like this one, and they can hit connect, input their account number, and then they will automatically receive the trading signals that are being generated from that particular system. So it's a really, really awesome way for traders and investors alike to basically get exposure to algorithmic trading or even hedge against their own day trading using systems that have proven track records without them doing any of the heavy lifting. So it's a really, really cool way to gain access to stuff that a lot of retail guys have never been able to access before.
Right. So that's awesome. So as you well know, the world of AI and ChatGPT and all this automation's out there. I think it's great. It's coming at a good time. I'm a massive fan of automation. I come from the listed world. I know you don't, the listed options world. I didn't have the luxury of automation, right? We did it, I've been around so long, we did it with pieces of paper and in our heads. One of the things that I notice about retail people, is that their workflows aren't always perfect.
Sure.
And they tend to have a lot of emotion in their trading skills. And my feeling is, the algo part of this or the automation part of this wipes that emotion away and makes them better. Do you agree or disagree? What do you think about that stuff?
I would absolutely agree with it in the execution part. With our systems, we run everything, server side. So these systems are just executing automatically whenever their criteria is met. So there's no hesitation. You're not fat fingering something and, maybe hit and sell when you meant to hit buy. You're not messing up your order size or anything like that. Everything is executing in the way that it's supposed to be done. And that really is the beauty of algorithms. It is the true form of discipline with a trading strategy, and it has no emotions. It doesn't get shaken out of trades. It never hesitates, and it doesn't do things that it's not supposed to. So there's absolutely a huge benefit to using algorithmic and automated trading systems when it comes to curtailing, the downfalls or some of the negatives that come with the emotional and human element of trading, especially trading.
Yeah, that's well said. Do you ever feel that the human has some bit of input or can have some bit of input? And I always liken it to modern day airliner, right? Those things can take off and land themselves. They don't really need the pilot there.
Sure.
But having said that, I certainly like seeing the pilot in the cockpit in case an engine goes, right? So similarly, if an engine goes on the algo or the automation, is it important for the trader to be there technically? What do you think about that?
Absolutely. I think that's a really interesting question, and it depends on the situation. In regards to how we do everything, all of our systems have built-in kill switches. And aside from that, there are humans actually monitoring the systems on the back end on the Algo exchange side. Now, when it comes to the customer side or our user side, if somebody hooks up to a trading system, they don't need to monitor it because ideally they're letting the system execute how it's supposed to.
Sure.
Now, people do have the ability to override positions. They can close out of trades whenever they want. But what we've seen from actually running the company and dealing with users that sometimes will kind of get into the habit of doing that is it actually negatively impacts their performance and kind of doesn't make the journey as smooth as it should be. With people using our product, it's designed to be something where you're allowing the system to do what it does best. That's kind of why people seek us out. But in terms of from an operational standpoint on the Algo exchange side, we always have either the developer or somebody that's monitoring the servers that we operate our systems on, making sure that things don't go rogue. And if things do go rogue from a programmatic standpoint, we have kill switches built in, but we also do have humans monitoring everything just in case, like you mentioned with the airliners, an engine blows out or something catastrophic is to occur. Right. But I would definitely say that it's best to not intervene, even though you have the ability to do so.
Sure. Yeah, that's all good points. So I know your expertise is in futures, not so much in options. Why did you choose futures? Just random luck of the draw sort of thing? I mean, I chose options for the same reason. I had no ability to even make a decision. It just happened. It just on my doorstep, more or less.
Yeah, I think futures was a pretty intentional move for me. A big reason that I got into it was one, I didn't want to have to look at a scanner and figure out what I wanted to trade every single day.
Yeah.
I mainly trade NASDAQ futures. That's my bread and butter. And, knowing that I'm going to trade NASDAQ futures every single time I sat at the trade desk was something that was very beneficial. It takes some guesswork out of it, or even takes that part of the analysis process out of it. And from there, you're pretty much just waiting for your setups to appear and execute on them. So the singularity of it, knowing what I was going to trade, was very beneficial for me in getting into trading futures earlier in my career. Obviously, the leverage is a huge part of it as well, that you're able to enjoy in options. And I personally think that maybe futures are a little bit simpler compared to options. We don't have Greeks or time decay or anything like that.
Sure.
So that's kind of why I went into it. I definitely had a lot of colleagues and friends that were big small cap traders, very big in the equity side of thing. But for me, it never really appealed to me the same way futures did.
Yeah, that's interesting. I think you're right. I think the simplicity, and it doesn't mean it's for people who aren't smart. That's not the idea here. It's they go up and they go down, right, for the most part, and you can trade them as such. And you're right. Options have what they call convexity. It's craziness, and there's all kinds of Greeks, as you mentioned. There is a lot to learn to be efficient on the option side, and that's why I personally like the futures as well. Are your algos, let's say, and the automation part, are they technically driven? Meaning, are there chart patterns that are behind this? Is there something else going on? Again, I'm not asking for the secret sauce. I don't want you to give that away. But what is it based on generally, without giving away the good cheese?
Yeah, absolutely. So a lot of our systems are built on technical models. There are statistical models as well, which are some models that you could just simply never execute by looking at a chart. It's a very, very interesting way of approaching the markets, but technicals do play a big role in a lot of the execution models that we have.
Okay, good. Yeah, see, it's funny because I started on the market making side of the business in options, right? And everyone says, wow, you must be great at technicals. I said, no, I suck at technicals because I bought on the bid and I sold on the offer 1 billion times, or as many times as I possibly could. Sure. I didn't care which way it went. All I want to do is do that all the time and generate edge that way. Well, retail people can't do that, right? They can't buy in bids and sell on offers. So they need some sort of work. I call them workflows, but they need some sort of workflow, right? And it sounds like what you're doing is giving people a workflow, and more important, you're adding the little automation piece, which I think is critical to that part. So can these algos, automation systems, can they be used by the user? Put them on at 8:30 in the morning Central Time, walk away, go play golf. If you're a doctor or a dentist, go drill, come back, see how I did, and then do one of these and say, or is it a little bit more kind of hand holding along the way?
It's actually much simpler than that. So
okay, even better.
about what we do is that it really requires absolutely no oversight or effort. You could be as hands-on as you want to be or as hands-off as you want to be. You're entirely in the driver's seat.
Okay.
So to kind of walk you through how the setup process would look,
Sure.
you come into the Algo Exchange environment, you see the library of different systems that we have, and let's say you pick one that maybe has a 4-year track record, the returns look appealing, the risk profile is something that you can live with, and that's the system you want to go ahead and connect to. All you would do is, you request the connection. We would approve the connection. And then all you do is you type in your account number. And then from there, it's good to go. You have the option to set custom stop losses. You can turn your sizing up. You could turn your sizing down if you like, or you could just leave it at the defaults. And then from there, whenever a signal is fired from the system, it's going to be sent over to the FCM, and it's going to automatically replicate that trade in your account. So once you set it up, you never even need to open your computer again if you don't want to. We do have some people that, will sit and babysit and monitor every single trade. And those people kind of drive themselves nuts because our systems are black box systems. They don't understand the exact logic or the rules of why the system is doing what it's doing. Sure. And then they're kind of just staring at their P&L all day, waiting for it to climb higher or praying that it doesn't go lower in the case of a losing trade, which can be, problematic for users. So it's ideally meant to be something that is extremely passive. You connect to it and let it do its thing.
Sure. That's great. So you mentioned stop losses. So do all the algos have a profit target and a stop loss appended to them, or can that happen if the user says, I want, more beef on my system?
So when it comes to profit targets, every system does have a profit target coded into it. Let's say, one thing to note is that none of our systems are high frequency. So if we're going to be, in a position, we're probably going to be in that position for minutes to hours. Pretty much all of our systems are intraday day trading systems, so they will be flat at the close. So if they don't reach their profit target by the close of the cash session, they will just flatten themselves out. They all do have stops, and those stops are in there as stop limits. So there's always going to be a resting stop order in case we get some crazy volatility out of nowhere. That downside is going to be limited.
Okay, great. How do they perform generally in this kind of market that we've had of late, which is, high volatility? I mean, I know we've come down a good bit. In my world, we kind of measure things relative to VIX. And when VIX gets above 30, that's considered very high, volatility in the marketplace, which it was for a while. Now it's come much further down than that now. But how do your algos perform in higher volatility environments?
Yeah, I mean, I think that the last couple of months that we had was extremely intriguing. Volatility is the fuel that goes in the car that gets your trade from point A to point B, right? So if you don't have any gas in the car, your trade's not going to go anywhere. In the case, we basically had rocket fuel, over the last few months when it came to volatility, and surprisingly, a lot of our systems did really well. Given the fact we do have a wide range of systems, we have over a dozen of them. Not all of them were profitable, and not all of them did poorly. We had some systems that did really well. Some had double-digit months. In some cases in March and in February. And some systems were kind of flat, not really doing too much, and kind of just sitting on the sidelines. But the most important thing, and one thing that was really pleasant to see from my perspective, is how controlled all the systems were when it came to managing risk. There were never any crazy moments, and we had some really crazy volatility in the NASDAQ, over the last few months. So, being able to handle that really well was awesome. We actually had some systems have like all-time record days, over 4+ year track records with some of the volatility that we had, because our systems do trade both long and short. So we were able to capitalize on each side, of the volatility, which was awesome. So they managed themselves out really well. Some systems performed exceptionally. Some kind of just sat on the sidelines, and some took a couple paper cuts. But overall, it was one of those things to where if you're well diversified, it was a very good outcome, I would say, especially compared to the broader markets. I mean, if you're a buy and hold investor on SPY or the Qs or any of the high beta tech names, you definitely weren't very happy over the last couple of months, and our systems were a really good hedge against that. Yeah, good. Awesome. A couple more questions, and we'll get into some pricing ideas and give us a flavor for that too. So would you say that probably it sounds like it's a great system for some of the beginners out there? Is that safe to say, or do you need to have a little bit more expertise than a beginner? What are your thoughts there? Yeah, absolutely. It's totally beginner friendly. Even experienced traders use our platform,
Mm-hmm.
but a lot of the users that come to Algo Exchange are people that don't necessarily want to learn how to trade. They just want exposure to the upside that could be achieved through day trading.
Mm-hmm.
And the coolest thing about it is it's as simple as we mentioned earlier. You find a system you like, you connect to it, and you let it do what it needs to do. So it is absolutely beginner friendly. Like all things with trading, obviously there is risk associated with the systems, even though they're automated and they're algorithmic trading systems, they still lose trades. And believe it or not, they actually lose a majority of their trades. They just have much larger winners than they do losers. And that's one of the things to where if you're a beginner trader, people might have a distorted point of view of what it's like to be a successful trader. And I'm sure you've seen this a lot in your career, but some people come into it with the idea that you need to win a majority of your trades to be successful in this game. And if you can kind of bury that idea and bury that belief and just understand that as long as you're making more money than you're losing over a large data set, that's how you're profitable in the long run, then it's absolutely something that a beginner or somebody from any skill level can use. But that is definitely one of those things that, if you come into it the wrong expectation, that if you're not winning 90% of your trades, then obviously it's not going to be a pleasurable experience. But that's true even if you're going to, trade options, trade stocks, trade futures, or do it manually. That's just a beginner limiting belief that I would like to call it. But in terms of a functionality standpoint or a learning curve standpoint, somebody with absolutely no knowledge of financial markets and how active trading works can pick this up and use it just like somebody that's been trading for 20 years. Good.
Yeah, I agree with you too, Austin. I think that those are great points. Even in my career being on the market maker side of things, and we had all the edge on the planet. We still didn't have 90% wins. There's no chance, not at all. But we were very effective at what we did, and it sounds like that's what this is as well.
Really?
Yeah. So, what about first of all, how can they find you? Is it simply algoexchange.com? And we'll put that rolling across the screen. Don't worry about it. Algoexchange.com, right? Are there different plan levels that people can join? Like there's the basic, the pro, the elite, that sort of thing.
Yeah.
Yeah.
So essentially, if somebody wanted to access the platform, essentially they could license the platform in a couple different ways.
Okay.
So we sell or we offer a license to the platform that allows you to use multiple algorithms at a time. And then the price breaks are based on how much capital somebody wants to expose to the system. So we have price breaks. If you want to go from 25,000 to 150,000, it's $9,800 one time. There's monthly service dues to actually maintain the systems and get you connected to them because it's totally cloud-based.
Yep.
So that covers those fees. And then if they wanted to use up to 300,000, it would be 15,000. And if they wanted to use up to 500,000 of trading capital, it'd be 20,000. And then if they wanted to use more capital than that, then they'd reach out to us and we would come up with a game plan.
Is there a baby version? Because I think your first one you said was I thought you said 9,000. If I'm not mistaken. Sorry.
Yeah. So the initial price is $9,800,
Okay.
and that allows you to trade up to $150,000 of trading capiple.
Okay.
The lowest account size anybody can trade on our platform is 25,000.
Okay. And then is that still part of that $9,800 fee if they have an account that size?
Yeah. So if you're going to trade with 25,000, it would be $9,800 one time, and then $197 a month. The system that you're connected to, and then if you were to go all the way up to, let's say, 120,000 of trading capital, that 197 would raise a little bit from there.
Okay, good. And do you find a nice little dispersion of those levels that you just mentioned? Are there good number of people in each category, more or less, or do people try to?
Yeah, it's definitely a bell curve. A lot of people that come into our platform will, put anywhere from $50,000 to $100,000 to work across numerous different trading strategies, and that's really the best way to utilize our platform is to diversify. Going into one system kind of puts people in like that magic bullet mentality where they expect one system to do everything they want it to do, and it just doesn't work that way.
Right.
You never build a stock portfolio with just one stock forever. Same thing with algorithmic trading is you really need to diversify across a couple different strategies, similar to how if you're going to be a manual trader, you probably have more than one setup that you trade. And that's the same way that people utilize our platform. So some people will come in, they'll put 25 here, 25 here, 25 here, 25 here, or they'll kind of mix it up however they want. But we definitely do have people that are, just $25,000 traders. A large majority is 50 to 100,000. And then we do have some people that are trading multiple millions of dollars on our platform.
Got it. Got it. And you mentioned earlier in the show that you personally focus on the NASDAQ, right? Are there any people who use this like with cattle, for instance, or hogs?
No. So that's a really unique thing about our software is it's all predefined. So users can't come in and change the symbol that the algorithm works on.
I gotcha.
So if they're going to subscribe to a trading system, the system is going to do all the heavy lifting. It's going to pick what asset it's going to trade, or it's actually built around that particular asset, and that's what it's going to trade.
Yeah.
Most of our systems are trading micro NASDAQ futures.
Yep.
Some are trading E-mini NASDAQs. The ones that are trading E-minis are typically a little bit higher on the capital requirement side. But we also do have systems that trade S&P futures as well. So they're trading the ES. But we primarily only focus on the NASDAQ and the S&P futures simply because of liquidity and scalability. I mean, these are some of the most liquid products in the world. So we're really able to have a lot of users take advantage of our technology without suffering any type of diminishing returns or anything like that through those asset classes. Whereas if we're trying to trade cattle, definitely wouldn't work. And believe it or not, even Dow or Russell futures would be too illiquid for what we're trying to do at scale.
Interesting. Okay. Very cool. Very cool. Okay. What did I miss? Tell me some things I missed, or say, Lex, we got it all for now, because we're going to do 2 episodes, right?
Yeah.
We're talking to you on this first one. We're going to talk to one of your coworkers, I believe, in the second one, right?
Yeah, absolutely. I mean, from a platform side, I could answer anything. I mean, anything that you want to know, whether it's about individual trades, trading styles, performance, that sort of thing. I'm happy to go over. Jason is my colleague that we're going to bring on for the second episode. He's going to cover more of some of like the client stories of how it's pretty similar from the manual trading world to the algorithmic trading world in terms of balancing expectations, emotions, that sort of thing, because it really does come down to the person in the end of the day. And I think that's something that maybe a lot of your viewers could resonate with, is the human element plays a huge role in trading. And 90% of traders fail because they get in their own way, not because they have a bad strategy. And we see a lot of similar things when it comes to newbies on the algorithmic trading world, is that they get in their own way. They're expecting something to work right away. They're expecting a specific outcome, and they're not going into it with the proper lens or expectation. And I think that's a message that can really resonate with people that are trading any asset with any type of strategy, whether it's through a system or whether it's a discretionary system or whether it's a rule-based technical system, but they're just executing it manually. I think he can really shed a lot of light on that. But I'm happy to go over anything else on the platform about technology, infrastructure, sort of thing, that sort of thing. So, I mean, one cool thing is, we've been around for, a couple of years. We're running just south of $100 million of retail capital across the system. So we actually don't take custody of any of the assets. All the assets stay with the customer in their own account. We can work with individual accounts, joint accounts, corporate accounts, or even retirement accounts. Some customers that hook their IRAs up to these systems, which is a really, really cool thing. And we don't work with any type of RIA, and so no investment advisors, no firms, no institutions. We specifically want to work with the retail customer because we believe that it's important to kind of level the playing field in a way. Give the technology that the retail world has never had access to, and give it to them and allow them to connect to their own accounts. And so far it's been a very, very rewarding journey, and we've seen a lot of people really benefit from these systems. And the coolest thing is just seeing how quickly it's grown. We went from last year being around $30 million of assets connected to the systems to, just now a little bit under 100 million, which is really awesome growth. And, all of our users, they keep 100% of their profits. There's no profit split or anything. That's a really, really cool thing for us to see. But I mean, I'm happy to answer any other questions you have, regarding the platform or things of that nature.
No, that's awesome. What I think we could do, what I think would be cool is, in the next episode, or even a third one if we have to, are you going to be, can you share a screen and show us some of the details of the platform, or is that just not?
Of course we can do that. Yeah, of course we could do that. We can go over track records. We even have third-party audits. So we actually hire third parties that audit asset performance for investment funds and things of the like, to go over our performance and justify, hey, Algo Exchange is the real deal. What they're showing is legit. So I'm happy to go over those reports. To show you some of the trading patterns that could be pretty interesting for some of your viewers to see. And we can go over all that stuff and show you the curve.
Let's do that. I think that's a great idea. We'll do a deeper dive with you sharing a screen, and you can show us, because I've got a pretty good idea from your explanation of what's going on here. But for some of our newer users and beginners, they're probably, for them to, it's always like, if I can see it, I can understand it. So let's do that on the next epi or the one after that, whatever you think is best, and get into some of those sort of things. I think this is just fascinating. I love what you're doing. And one last thing before we run, do you think that the people who sign up with you, they're obviously not taking all their assets and doing a DIY on that themselves, right? They're taking some part of that, and if they're rich people, they probably have some sort of money management going on. And then, I know I'd want to do a little bit on my own. I wouldn't want to do all of it on my own.
Absolutely.
Even though it's algo and automated, I still don't have the time to do it all.
Absolutely.
So is that fair?
Absolutely. And that's one of the things to where we would never even let a customer utilize our technology if they were, putting everything they had towards it.
Yeah.
I think that's just kind of negligent. There's a huge responsibility that, people should, come into this with, and us as a company kind of enforces that, any type of day trading should always be done with risk capital. And, that's a great thing that we've been able to enjoy with Tradier, is that, you guys are making sure that the customers that are utilizing our technology are good fits, because not everybody is a good fit for this. If someone's only got $26,000 to their name, they shouldn't put $25,000 in a trading system.
Right.
And expect to get rich overnight, because that's simply not how it works.
Yep.
So you definitely need to, make sure that any type of capital allocation is risk capital, and that's a very big part of it. Yeah.
Okay. Good. That's good to know. That's
an
good.
Alternative asset. It's meant to be a part of your portfolio that's risk on, that's not correlated to the broader market, and can do something that your overall portfolio isn't doing. Right. It's outperforming the benchmark significantly. It's market neutral. Doesn't matter if the overall market's going up or down. It's able to take advantage of it, and it's meant to be a piece of a portfolio, not an entire portfolio.
Okay. Fair. I love it. So, is there any way I'll ever talk you in the option side of this? Just checking.
I don't know, Lex. I don't know. I like to kind of do what we do best and forget the rest. Futures have been a great market for us to tap into, and there's a lot of upside still. So
I gotcha. All right, just testing, just seeing. That's
happy
okay.
to pick your brain on it. Maybe we'll do equities in the future, but
all right, fair.
Right now, it's just the indices.
Fair. All right. Here's what we're gonna do. Let's do part 2, and we'll take a deeper dive. We'll look at the system. You're welcome to bring Jason on for that one as well, and we'll do another part 3 for the customer journey. I think as you described it with Jason, is that fairly accurate?
Yeah.
When we do that, so we'll get 2 more out of this. How's that sound?
That sounds good to me.
All right. Really great to meet you, Austin. I think it's the first time you and I have spoken, right? And I've heard a lot about Algo Exchange through Brian and everyone, and I love what you're doing here. Congratulations. This is awesome.
Appreciate it.
All right. We'll see you on the next one. Cool?
Thanks so much.
All right, man. Nice to meet you.
Take care. Thank you.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.